Hello, everybody. This is Patrick MontesDeOca with Equity Management Academy. This segment is brought to you by the IRA Advisor Group, securing your retirement in gold. We have the honor and pleasure to have with us today Mr. Rick Rule, founder and chairman of Sprott Global Resource Investments. Mr. Rick Rule has dedicated his entire adult life to many aspects of natural resource securities investing, and in addition to the knowledge gained in a long, successful, and focused career. He has a worldwide network of contacts in the natural resource and financial worlds. As chairman of Sprott U.S. Holdings, Mr. Rule leads a highly skilled team of scientists and financial professionals who enjoy a worldwide reputation for resource investment management. Sprott U.S. Holdings is active in securities brokerage, segregated account money management, and investment partnership management involving both equity and debt instruments across the entire spectrum of the natural resource industry. Welcome to Trading Talk, Rick.
Pat, always a pleasure. Thanks for the opportunity.
Let's move into recently the latest meeting that we had with the new chairwoman, Janet Yellen. Can you comment on her first testimony in front of Congress yesterday?
Well, it was, from my point of view, unfortunately predictable. I think she's probably a very nice woman. I think she's very intelligent. And I think in terms of the candidates that they considered for Fed chairman, she was probably a good pick. My problem is that the candidates that they considered, it would appear that among the credentials that you need to become Fed chairman is never having had gainful employment, at least in the private sector, never having had to produce a product other than an academic paper, and never having had to have met a payroll. In other words, there's a disconnect between the Fed members and the Fed chairman and the real economy. It reminds me of a very recent article that was written by Alan Greenspan in Foreign Affairs magazine, where he was asked why he missed the 2008 financial collapse in the real estate bubble. Mm-hmm. And to summarize his response, it was because the market didn't conform to the model. Mm-hmm. The idea that our economy is run by people who believe that the market ought to conform to the model rather than the other way around is the strangest sort of public policy announcement I've ever seen. Mm-hmm. So in the context of their paradigm, I think Ms. Yellen was an interesting choice. I'm terrified with regards to the implications for the country, not of Ms. Yellen herself, mm-hmm. but of the process that would select her.
Right. Do you think that the Feds will continue with this strategy, and how will this affect the emerging markets moving forward from here?
Well, she has clearly said that the 6.5% unemployment trigger that was put in place before with regards to the end of the interest rate manipulation is no longer a hard and fast subject. She knows, and all of the big thinkers know, that the aggregate debt of the United States federal government, let alone state and local constituencies, is such that they can't afford higher interest rates. Right. So they will use whatever policy excuse they can for as long as they can to facilitate artificially low interest rates. The other thing, Pat, that I think we need to consider is that the voters in the United States, by and large, support this. There are more consumers, there are more spenders in the United States than there are producers and savers. And an income transfer from saver to spender, which is what artificially low interest rates are, is unfortunately very popular. Mm-hmm. So we can expect broad public support for this mandate, despite the fact that it isn't in the country's interest.
Are we turning the corner for the U.S. economy to warrant a change in this policy in the Fed funds purchases or tapering strategies?
Well, I think that there are still some good aspects of the U.S. economy, none of which have to do with the Fed or the government. Okay. We still have the most innovative economy on the face of the earth. We still have an economy where, despite the best efforts of the government and the Department of Energy, the private sector can come up with a conjunction of technologies like management well drilling, horizontal drilling, multi-stage fracturing, all this kind of stuff, and kick off the shale revolution, where you take a mature producing province like the United States and you increase production by 2 million barrels a day. Incredible. Could only happen in America. We still have an economy where, despite burdensome regulation and all the idiocy imposed on us by the government, that a group of pimply-faced college students could start something like Facebook and change the world.
Right.
There are wonderful things about the U.S. economy, all of which are dramatically divorced from the government and government policy. The difficulty is that the United States is becoming more and more political, which is to say that we're focusing on the destructive and constraining the productive. Mm-hmm. And the recovery of the U.S. in the 10 to 15 year time frame will depend on whether the private sector begins to triumph over the public sector again, or whether the inverse holds true.
Rick, my following question has two parts to it. Since interest rates have started to move higher in reaction to the tapering of the U.S. bond purchases by the Fed, number one, how will this affect the U.S. interest payments on its current debt, and will this have a major repercussion across the world economy? Go ahead.
It would appear that they are beginning to be able to taper because they raised marginal tax rates on the productive sectors of the American economy. Mm-hmm. What they describe as quantitative easing, I've described on your show before as counterfeiting.
Yeah.
The truth was that we had a deficit, a current account deficit in the United States of $1.3 to $1.4 trillion.
Right.
As a consequence of the fact that we have stolen more of the productive activity of wealthy Americans, we have reduced the current account deficit to about $1 trillion a year, which means that we only need to counterfeit $250 billion a year rather than the $600 or $700 billion a year that we used to have to counterfeit. That's what the tapering is all about. Mm-hmm. It is my belief that as a consequence of that, the continued diminishment of interest rates probably declines, that interest rates stabilize. And if interest rates stabilize and maybe increase a little bit, the impact of that will probably be challenging times for markets on the periphery, speculative markets, emerging markets, and frontier markets, leverage, as more money flows into the center.
Right. If the economy retracts due to these tapering strategies, what are the alternatives for the Fed as we move into let's say, the second half of 2014?
The Fed doesn't have any alternatives. The Fed's only hope is to hope for an organic recovery in the United States.
Right.
That isn't liquidity related. They've already pumped so much liquidity in there. There's not too much more that they can do. They need to hope for an organic recovery, which would help them enormously. Those are their only alternatives. The truth is that the center spends faster than the periphery can sustain it. And so you need to default either by way of saying to beneficiaries of government programs and entitlements, I'm sorry, we can't sustain this level, or you need to default a different way, via inflation. You need to reduce the net present value of the purchasing power of those obligations. To the extent that you can't do one or the other, then you have to continue to counterfeit. You have to pay the bills with money that you fake as opposed to earn.
Let's talk about gold and silver for a minute. As we do this interview, gold is trading above 1,300 at 1,302, and silver is trading at about 2,046. It looks like we have seen some kind of a bottoming process take place since late December. Do you think this is the beginning of a bigger trend developing?
I do. But I think that this may be a head fake rally.
Okay.
In other words, I think that we're going to see a very volatile market with lots of up and downs. But I think we're going to be seeing higher highs and higher lows. For those listeners of yours who are primarily traders, think about a range-bound metal, but with the range moving consistently higher.
Higher highs.
Don't be too excited about technical breakouts to the upside, because there's plenty of things that could constrain us to the downside. But think about a rising channel with higher highs and higher lows, but incredible volatility along the way.
We have seen the mining shares come back nicely since December. Is this confirmation that the whole sector has bottomed as well?
I think it is, Pat, but I can't say.
Okay.
Certainly what you describe with regards to the juniors is, and the seniors, is very hopeful.
Correct.
It's hopeful for a couple of reasons. One, bull markets, as we've discussed before, of course, born of bear markets, and the extraordinary bear market pricing led to some buyers, tepid buyers, coming into the market. If we observe the year 2013, we see the following broad attributes. The first third of the year was catastrophic. We had forced selling in the face of buyer exhaustion. And so the stock charts look like the topographic maps of ski hills, just catastrophic falls from the upper left to the lower right. In the middle part of the year, what we saw was buyer exhaustion still, but seller exhaustion as well. So the stock charts went horizontal. We joke that they look like the electrocardiogram of a corpse, pardon me. At the end of the year, what we saw was complete seller exhaustion, no sellers left, with the better majors and the juniors, the better juniors, getting a bid. So we saw share price rises, sometimes very dramatically, but on very low volumes. There wasn't really conviction buying, but there was no selling. This is absolutely consistent with the bear market bottoms that I've observed in the last 4 cycles that I've had in my life. So in terms of calling this a market bottom, the pricing levels, absolutely. The narrative, absolutely. The price performance, absolutely. What is missing has been, at least in the juniors, issuer capitulation. The sense that you need to raise money to advance your projects, not merely enough just to survive. You have to understand the fact that the market capitalization of your company is dramatically lower than it was at 2010, but you can't worry about what the market capitalization was then. You have to raise money now on terms that clear the market now so that you can beneficiate your projects and grow. That occurred in July of 2000. I remember it absolutely crystal clearly. And while the market continued to be soft for 2000, 2001, 2002 for the broad market, for the better exploration juniors, they began to generate 100% compound annual rates of return at the bottom of a bear market. If we see issuer capitulation this year, which I pray we will see a recovery that I suspect stuns even the most aggressive commentators in this market.
Rick, there are many reports that China's economy is on the way down and it will take the rest of the world with it. Your comments on this?
Well, I think China is going to hit a hiccup. China decided to address the difficult aspects of the correction that we experienced in 2008 the same way we did, which was a mistake. The whole world experienced a hangover in 2008 from a very aggressive party that they'd enjoyed through the rest of the decade. And what we tried to do was finance a vodka hangover with rum, and China tried to do the same thing. They introduced a lot of liquidity into the system, and they did it through a lot of opaque and ill-advised loans, and that needs to work its way through the system. But the truth is there's a lot in China to like, too, particularly Chinese people. If you look at the success of the Chinese people, the Chinese diaspora outside of the Chinese mainland, it is a proven fact that if you allow Chinese people to become more free, they become rapidly more rich. And the process of political liberalization in China, I think, is a bigger story than the inefficient allocation of capital. So my suspicion is in China that you will have to deal with the impact of 3 years of malinvestment, which will take 2 or 3 years. But as long as the government of China continues to have the courage to allow gradual reforms of the Chinese market and allow Chinese individuals to work hard, to save, to invest, to send their kids to school, and to allow them gainful employment, that China will continue to be the engine that pulls the world.
Developing countries like Zimbabwe, for example, have replaced the dollar with the Chinese yuan as their local currency. Is this a sign of the demise of the U.S. dollar as the world's reserve currency?
I don't believe so. My Chinese clients themselves, my high net worth Chinese clients, tell me that although emerging markets don't trust the United States, they trust each other less.
Mm-hmm.
The United States currency, I mean, it's ironic that 4 months ago we had a situation where we threatened to default on our U.S. sovereign obligations, and the market's response to that was to bid up the U.S. dollar and U.S. debt.
Right.
That will tell you something about the durability of the franchise that we're proposing to waste. I would describe the U.S. dollar in the context of being the world's reserve currency as being the prettiest mare in the slaughterhouse.
Right. Oh,
the renminbi is challenged by the opacity of the Chinese economy. It's challenged by the structure of an economy where 20,000 people attempt to rule 1.2 billion people. It's challenged by the depth of the securities market, and it's challenged by the liquidity with which it trades on a global basis relative to the U.S. dollar. In other words, it is useful to talk about the Chinese currency superseding the U.S. dollar in the context of the fact that it helps sell newsletters.
Correct.
But that's sole utility. It can't compete against the U.S. dollar in a fair fight. That isn't to say that the Chinese economy can't grow faster than the U.S. economy. That's a very, very, very different discussion. But the idea that any currency on a global basis, any fiat currency on a global basis, can compete with the U.S. dollar for the next 2 or 3 decades is a non-starter.
Well, what about the idea that China is buying the yellow metal in preparation to back their currency, basically, against the dollar as the world's reserve currency or a competing currency?
I think that they're buying gold because they realize that they're getting bagged with U.S. Treasury securities. They're buying securities that are issuing that are paying them 3%, while the purchasing power of the bond is declining by 6% compounded.
Right.
Which is a different way of saying they're getting bagged for 300 basis points a year.
Right.
And they're diversifying out of the dollar as rapidly as they can. The idea that the 20,000 people that run China would constrain their power by tying their currency to gold is a non-starter. Those politicians, like politicians everywhere, regard power as their mother's milk. And the idea that they would discipline themselves by tying their currency to gold, in other words, the idea that they would give their citizens a fair shake, will never occur in any country, ever.
Can the world withstand such a transformation if that was to be the case? Basically, where the Chinese currency and the dollar become competitive in terms of gaining control as the world's reserve currency, or will it be maybe a basket of currencies that might replace it, or the dollar become part of a basket of currencies?
Competition is always great, but I don't see I don't see a basket of currency replacing the U.S. dollar, because the only people in favor of a basket of currency approaches are central bankers in countries that would like to be included in the coalition. What the market is telling you is that the U.S. dollar, for all its faults, is the world's reserve currency, and any other discussion is simply academic.
Okay.
Now, you and I can take the point of view that that's an extremely risky proposition, and that we would like to hold our own wealth in a variety of assets, including, of course, gold, silver, platinum, and palladium. And that's an equally intelligent discussion. But the idea that there's a practical alternative in the near term, by near term I mean 10 or 20 years, to the depth, liquidity, and transparency of the U.S. dollar debt markets in anywhere else in the world, in any way, shape, or form, is fantasy.
Rick, you recently completed a couple of mandates that were assigned to Sprott Asset Management from China to invest in the mining and precious metal sector. Can you expand on that a little bit?
Yes. After a 3-year engagement, we successfully completed mandates received mandates in the fourth quarter of last year from Korea Electric Power, the National Pension Service of Korea, and in a joint venture, Zijin Mining of China, raising a substantial amount of long-term fresh capital for deployment in energy and mining markets on a global basis, both in terms of debt and equity. This is very important because it aligns Sprott with investors that don't have a 2-week or 3-week view of capital markets associated with natural resources. And it aligns us, as an example, with the interests of the pensioners of Korea, who have a 30 or 40-year horizon. It also points out that Asian countries are eager to develop the resource, financial, and capital markets that the United States, Canada, and Europe enjoy, and that those economies are embarked on the same sort of strategic investment with regards to securing raw material supply that happened in Japan, the United States, and Western Europe in the 1960s. In this sense, past is very much prologue. We think that the availability of this money and the availability of money in the context of making long-term investments in a long-term market is good for the underlying industries. That is good for the mining business and good for the oil and gas business. It is certainly also, of course, very good for Sprott, and we will do our damnedest to make it very, very, very good for the beneficiaries of Korean Electric Power, the National Pension Service of Korea, and the Chinese taxpayers. We think what it says to the industry is when the industry says there's no capital available, we say this is ridiculous. Right. There's lots of capital available. We have it, and some of our intelligent competitors have it. There is very little dumb money available. And a lot of the problems that the industry suffers now, it suffers as a consequence of its reliance on the dumb money that was spent in the last decade. Mm-hmm. Most of the money that's available now is private equity money, sovereign wealth money, or industry money, determinedly smart money. And I think that's very good for the industry.
Do you see some of the money moving now into the precious metals, gold and silver areas?
The money that we raised will not go into bullion specifically, but it will go rather into project finance and exploration finance in terms of the companies. We are also involved, when I say we, I mean Sprott, in talking to some of the largest money in the world in terms of making what we think are highly intelligent bets in the bullion space. Mm-hmm. We haven't successfully concluded any of those discussions, but the truth is that it took us 3 years to win the mandates that we announced in the fourth quarter of last year. And if somebody suspects that Sprott is party to 1 or 2 month discussions with regards to what we'd like to do in the bullion markets, they're sadly mistaken. We're talking to the biggest, smartest money in the world, and those discussions take a long time. If they're successful, you would see Sprott-led endeavors in the bullion markets that would surprise people.
Where can our audience contact you, Rick?
We would encourage your audience to come to our website, which is www.sprottglobal.com. In particular, having visited the website, we would encourage your subscribers to look for the Sprott's Thoughts publication. That's a 3 times weekly free publication, electronic publication, that brings you the very best ideas and the very best insights of the entire Sprott community. People like Dr. Mark Faber, John Embry, Eric Sprott, myself, and the other thought leaders at Sprott. It's published 3 times a week. We know your subscribers will get their money's worth because it's absolutely free. All you have to do is go to www.sprottglobal.com and click on subscribe.
Once again, Rick Rule, founder and chairman, Sprott U.S. Holdings, thank you for joining us on Trading Talk.
Thank you so much for the opportunity. I've enjoyed it.